Good afternoon, everyone. Happy Thursday. I appreciate you guys taking the time to join us on today's webinar. It is top of the hour, and I do want to be respectful of your time, so we're going to go ahead and get started. I'm Renieka Lightbourne, and it's always a privilege to have the one and only Ms. Chantelle Owens from Tax Lien Bootcamp as our featured speaker. And today, we're going to talk about the big benefits of tax lien investing in your self-directed IRA. Thank you so much, Chantelle, as always, for being our featured speaker.
Thank you, Renieka. I'm excited as always. Thanks for having me.
You're certainly welcome. But before I hand it over, I do want to kind of just give you a general overview of what self-direction is, and also talk about the checkbook control LLC feature that a lot of tax lien investors typically utilize when purchasing, tax liens or tax deeds in their retirement account. If you have any questions, go ahead and put those in the question box. We'll get those answered for you. And let's get started. So again, my name is Renieka Lightbourne. I'm one of the business development specialists here at Advanta. I've been an employee of Advanta since 2019, but I'm also an Advanta client prior to joining staff. So self-direction is something I do actively. I actually just did a deal I think today, in my retirement account. So this is something that I strongly advocate both personally and professionally. If you have any questions or you want to talk through your exact scenario, don't hesitate to give me a call or send me an email or visit advantaira.com, as it's a great resource. You can also schedule your consultation with me online. So just a little housekeeping before we get going. Just know that at Advanta, we don't give any tax, legal, or investment advice. All of the information that's going to be presented today is just for educational purposes. So, like always, we encourage you to do your due diligence. You want to consult with your professional teams. You want to talk with your CPA and attorneys and so forth. I know with Chantelle Owens and her group, when they teach you about tax lien, due diligence is very important. So if this is a new concept for you, I just want you to remember three simple things. One, any IRA or former employer plan, like an old 401k or 403b or TSP type plan, qualifies to be self-directed. Two, you choose the investment that works best for you. Today, we're focusing on tax lien investing. And then, of course, knowing that all of the income and all of the expenses associated with that investment is paid out of the retirement account. So as a tax lien investor, if you're getting interest returns, those interest payments will flow back into your retirement account. If there's any expenses, saying paying property taxes, it'll be paid out of the retirement account. Just a little history about Advanta and who we are. We've been in business for 20 plus years as one of the leading self-directed IRA administrators in the industry. While we don't give any tax, legal, or investment advice, our team is comprised of attorneys and also certified IRA service professionals. We have a little over 11,000 plus clients, $2 billion under our administration. In addition to providing you great educational content that feature experts like Chantelle, we also provide you, or our clients, that concierge style service where you're going to have an assigned account manager that works with you for the life of your account, meaning you have a direct point of contact. Do know that all of our webinars are recorded, so you can certainly go to our website to look at our video library, or you can check out our YouTube channel. I would also encourage you to go to our website to look at our events page to see upcoming webinars and promotional events that we have going on. So exactly what is a self-directed IRA? Very simply just means that you as the account owner, you're going to have complete control over your retirement funds. You're going to have complete control over how those funds and where those funds are invested. But also too, it gives you the ability to diversify outside of the traditional stocks and bonds. So in addition to using IRA funds to invest in tax liens, you can certainly do a fix and flip or a multifamily or a syndication type project. You can use IRA funds to invest in the likes of precious metals, private equities, oil and gas. It's essentially now limitless in terms of what you can do inside of your self-directed account. So a question I typically get from a client is, why do people choose to self-direct? There's many different reasons, but I'll just kind of touch on three of them. One, it's a new source of capital for you. So instead of taking out a bank loan or tapping into your personal, emergency fund, if you have money that's sitting in an IRA or sitting idle in an old 401k or old employer plan, you can elect to move those funds over to make that next investment. Two, the ups and downs in the stock market. We know a lot of our clients typically invest in real estate. We know with tax liens, it's secured by that tangible physical real estate, whether it's a piece of property or land. And with real estate, we know people are always going to need a place to live. It's a tangible asset that's always going to retain some value. And then, of course, the tax benefits, having those rents, those profits, those dividends or interest payments flow back into your retirement account, tax-free or tax-deferred, depending on the type of account that you have. In terms of the types of accounts that can be self-directed, it's the ones that you're already familiar with. Again, the term self-directed just means that you get to decide what is it that you want to invest in. But for the actual account type, for individuals, pre-tax dollars or traditional IRAs, if it's a post-tax, meaning you elect to pay taxes now, grow that account over time, that's a Roth IRA. And then, of course, if you are self-employed, have a small business or a side business, you can certainly look to self-direct SEP IRA, Simple IRA, or Solo 401k. A lot of real estate investors do like the Solo 401k just because you have greater flexibility in terms of higher contribution limits and a little bit more things that you can do with that. If you want to know more about the specific account type, specifically Solo 401k, again, feel free to reach out to me and we can talk through that. Some lesser known accounts that are also, just as important are educational savings account and HSAs. If you have a high deductible plan, you can elect to self-direct an HSA. An example of that would be, if you have an HSA, if you're qualified for an HSA and you have a couple $1,000s in there, maybe you go to a tax sale auction and you win a bid for, let's say, $3,000 or $5,000 and you end up with the property. And that property is actually worth, or a plot of land that's worth, like, let's say $20,000 or $50,000. Your HSA just went from, $5,000 or $3,000 up to that $20,000 or $50,000. So again, it's a great opportunity for you to utilize even with smaller accounts. And then, of course, any former employer plan, like an old 401k, 403b, or TSP type plan, can be self-directed. The key thing to remember here is with Roth accounts, as long as you've had that Roth account for 5 years and you're 59 and a half, which is the retirement age, those distributions will be tax-free. So for 2023, as long as you have earned income, you can make annual cash contributions. If you have a traditional Roth IRA, if you're under the age of 50, you can put in $6,500. If you're over the age of 50, you have an additional $1,000 catch-up, so you'll put in $7,500. For SEP IRAs, you can contribute up to 25% of your earned income, not to exceed $66,000. For Solo 401k, again, you have greater flexibility to where you get to contribute twice, essentially once as the employee, and then also you get to match as the employer. If you're under the age of 50, for Solo 401ks, you can put in $66,000. For ESAs, you can put in $2,000 per year per child. For HSA, again, depending on if you have a high deductible plan. If it's an individual, you can put in $3,850. If it's a family plan, you can put in $7,750. But you also have the option, if you're 55 with an HSA, you can put in an additional $1,000. So in addition to funding your account by making an annual cash contribution, again, you can transfer from an existing IRA or you can do a direct rollover from a former employer plan. So there's two ways you can essentially invest in your retirement account. You can do it directly through the IRA, meaning you open up your account with us, you fund your account with us, and then you tell Advanta to send the money where it needs to go. To buy 123 Main Street or buy a tax lien, send cashier's check to buy, to invest in tax liens. If there's a bill that needs to be paid, you tell Advanta to pay that bill. You provide that invoice or that bill. Advanta does it based on your direction. The other way that you can invest using self-directed IRAs is indirectly through what's called checkbook control or an LLC IRA. A lot of real estate investors, specifically fix and flippers and tax lien investors, like the LLC feature just because it gives you greater flexibility. The process to do the checkbook control feature is pretty straightforward. It does, require some moving parts, but once you're up and running, it's essentially, it gives you control over the purse string. The first step would be obviously opening up your account with us. We get that open pretty quickly within 24 to 48 business hours. The next step would then be funding that account. So making a cash contribution, transferring from an existing IRA and or rolling over from an old employer plan. The next step is to open up a brand new LLC. So not an LLC that you personally or currently own. This is going to be a brand new LLC that you get to act as manager of, but it's actually going to be owned by your IRA. You'll also draft and operate an agreement document that shows that the IRA is the actual owner. This lets the IRS know when this LLC goes out and buy a tax lien or buy 123 Main Street, don't come after me personally. I'm just a manager. It's owned by my retirement account, which is tax sheltered. Advanta, as the administrator, as the custodian for your retirement account, signs off on that operating agreement. But ultimately, before any money leaves your account, you give your consent, you read and approve, fill out the purchase authorization with us, and then Advanta will issue a check in the name of that LLC that you just opened up. Again, it's owned by your IRA, but you have the authority to then go to whichever bank you prefer to bank with, big bank, small bank, credit union, open up a checking account for that LLC as the manager, deposit those funds, and now you literally have control of the funds. The same IRS rules apply, though, making sure that any money leaving that bank account is for investment purposes, is not to be commingled with personal funds. But this gives you the flexibility to, whereas I know in Georgia, taxes are held on the first Tuesday of the month. You can go directly to that, that tax sale auction, and you don't have to wait for Advanta to send you cashier's check. If you win a bid, you can send it directly from that LLC's bank account, or a cashier's check from that bank. Obviously, if you end up winning a bid and it turns out to be interest payments, instead of them sending the funds, the interest returns to Advanta to be deposited into your account, they'll send it directly to you to be deposited into that LLC's bank account. If there's any expenses, again, you have to pay property taxes, or let's just say you end up with a physical property and you want to turn it into a rental or a fix and flip, you would actually handle all the expenses in and out for that particular property. And then essentially you get to rinse and repeat that strategy. So that's a high level of checkbook control feature. Again, if you need me to clarify anything, feel free to reach out to me. In terms of getting started with us, again, the process is pretty straightforward. Step one, fill out the paperwork to open up your account. You can do it electronically. Step two is funding your account. Again, cash contribution, transfer, or direct rollover. And then finally, what is it that you have an interest in? If it's tax lien, you can do it directly in the IRA, or you can do it indirectly through an LLC. And with that, I'll go ahead and turn it over to our speaker, Chantelle. Let me make you the presenter.
All right.
Okay.
Well, thank you, Renieka and Advanta IRA. I certainly appreciate being your guest speaker today. I'm excited to talk to you and your audience today. So welcome, everybody. I'm Chantelle Owens, and I am the CEO and founder of Tax Lien Bootcamp. And today I'm going to talk to you about tax lien, as well as my story as it pertains to tax lien. So let's go ahead and get started. So I want to jump right into a real live example of tax lien investing. Tasha paid $2,100 for a property. The after repair value of the property was $150K. And just to give you an example of that property, it was a 4-bedroom, 2-bath home in Ellenwood, Georgia, and the owner had a mortgage on the property for $139,000, but was upside down, meaning they owed more than what the property was actually, worth. And then Tasha came along and purchased that property for $2,100. So that's a perfect example of what tax lien investing can do. So the actual owner of that particular property was myself. So I was actually the person who was upside down in the property. Actually, the values had dropped to $100,000. So when Tasha bought it, I owed $139,000, but the market value on it was actually $100,000, and I was upside down, right? Then, later as the property, as the years went by, the value continued to increase. So in essence, Tasha, if she would have kept that property, she would have purchased the property for $2,100. She would have had an instant $100,000 equity. And then as time went on, the value in that property would have grown. When I originally purchased the property, it was worth $150,000. But due to the timing of the market crash, the value has started to go down. So what happened with that property is I actually got to reverse engineer the process of tax liens because I was on the other side. So I was on the side of a person, a property owner, having a tax lien on their property, right? And in Georgia, there's a year and a day in which I have to go and, redeem that property. So that's exactly what I did. And so I learned about tax lien investing through that reverse engineer process. And I was just flabbergasted because at that time, I was already a real estate investor. I had already done wholesaling. I had already done fix and flip. As a matter of fact, this property was a rental property. So I was already, doing rentals. And I really didn't, I had never stuck my toe into tax lien investing. And it was simply, I knew about tax lien investing, but I found it to be very intimidating. Just, what happens on this day, what if you can do this and when you can do that, and if I would actually get the property. So all those things really made me intimidated. And I had actually ventured down to Fulton County to attend a tax lien auction and just was very overwhelmed with the amount of people, the culture of tax lien investing. It's really, Shark Tankish, like nobody really wants to help you understanding the basic things like where the auction even is. So, once I found the auction, I watched the auctioneer auction off properties, and every time somebody would win, she would know their name. So I was like, oh my God, like, is this rigged, or, is it just only a handful of people that always buy, like so many questions that, I just decided to stick to fix and flip, and buy and hold what I already have been trained in and what I knew. And so I missed about 5 years of tax lien investing just because I was intimidated. So when I actually went through this process, I was, like I said, flabbergasted because I started to understand the process, and I actually started to believe in it because I was going through it, and I was like, oh my God, somebody is actually going to be able to get the property that I have a mortgage on for $2,100. Like, yeah. So, it really kind of made me a believer. And, even though it was a rough time in my life going through the market crash, of 2007, 8, wherever you are, it happened in different, time periods. But going through that market crash, it was a rough time, but actually going through this process gave me hope to actually get through that process and understand that, I would be able to achieve, my financial dreams and goals because I had a way that, would allow that to happen a lot quicker. So that's how I reverse engineered the process. And, it really helped me with my goals of creating generational wealth, of leaving, property and inheritance to my children, and then they'll be able to leave that to their children. So if, that's something you're interested in, it's definitely achievable with tax liens. So let's talk about what tax liens are, because a lot of people don't really have a clear understanding of what tax liens are. So simply put, if a person doesn't pay their property taxes, the county will file a lien against the property. That lien becomes the superior lien. It will supersede a mortgage. It will supersede state taxes. It will supersede federal taxes. The only liens that it won't supersede our other county liens. Like, the county really is the owner of the land. So all those other liens can't supersede its lien. Like, all those other liens have to bow down to the county as well. So just to give you an example, if let's say the state department took a person's property because they didn't pay their state taxes. If they took that property, the state would still have to pay the county taxes. And so that's why that county lien supersedes all other liens. So that's important to keep in mind when you're understanding tax liens.
Chantelle, I do have a
So
couple
let's,
questions that came in, if you don't mind.
sure.
It's relating to
Yep.
taxes. Question is, if I own a tax certificate and the IRS or state files a lien on the property, what do I do to recover my investment? Same thing applies if they want a tax deed.
Okay, so let me just go over the definition of those, and then I can answer that question. I think it would be more clear to the audience. The
Makes
answer
sense.
would make sense.
Okay.
Okay, so let me just, okay, so tax liens. So when we hear the word tax liens, a lot of people get that mixed up with tax lien certificate. And just scratch that from your mind. A tax lien is just like any other lien. It's a lien that the county places on the property because a person owes back taxes. That's it, right? Now, how the county sells that lien is what most people are having an understanding. So the county can sell its tax lien on a property as a tax lien certificate, as a tax deed, or redeemable tax deed. So I'm going to go over the definitions of those and just give you, a little background. So a tax deed, you have a couple different types of tax deed. So first you have a judicial tax deed. That's a deed that has gone through the judicial process and can be sold directly at auction by the county. It conveys full property rights to the person who is buying it. So this is really the highest example of the county selling a deed to a person, and once that person gets that deed, that person or investor actually owns the property. There's nothing else going on. It's a done deal. So that's a judicial tax deed because it has already been adjudicated, it has already been through a court of law, and there's nothing else that needs to be done with it. Then you have non-judicial tax deeds, and this is the type of tax deed that most of you have heard about. This is the type of deed, it's very similar, it's just it has not gone through a judicial process. The person owes the county back taxes, the county files a lien, and now they're going to take that to auction to sell. So if you buy a non-judicial tax deed, then you have property rights, but you don't have marketable rights, which means you can't sell the property with a clean title. You have to clean the title up. So this type of tax deed is going to require a quiet title to clean all of that up. But you at the end of this process, you actually own the property. Then you have a redeemable tax deed. This type of tax deed, and each one of these are kind of similar, but they have a difference. So this one is very similar to a tax deed, except there is a period of time in which the homeowner can come back and redeem. So with the first two, the judicial tax deed and the non-judicial tax deed, once the county sells that, there's no redemption period and the person can't come back to pay the taxes. And that's because the county has already given that time to the homeowner or property owner prior to going through this process. So those judicial tax deeds and non-judicial tax deeds take a little longer to actually go to sale, right? Whereas with a redeemable tax deed, this is the quickest way for a county to get that tax lien to sell, is to sell it as a redeemable tax deed. So in that case, they're going to give the property owner some time to come back and redeem it. So you as the investor, if you purchase a redeemable tax deed, you are going to have to wait for that state specified redemption period. So let's say in Georgia it's 365 days. And then you can start the process of foreclosing on that right to redeem. Once you foreclose on that right to redeem, then the property owner, and then now you could just go through a quiet title process to have a marketable title and to remove all those other liens, you know, off the title. So, and then lastly, we have tax lien certificates. And this is the one that most people, when they hear tax liens, they think of tax lien certificates. And before I give you the definition of a tax lien certificate, I just want you to know that a tax lien is totally different than a tax lien certificate. The tax lien, once again, is what the county has filed in the deed records. They're filing their lien. That's the county's lien, is the tax lien. How they sell it and what the investor receives when they buy it is a tax lien certificate. Now, what a tax lien certificate is a certificate, or basically a receipt, that does not convey any property rights at all, but it entitles you to receive interest. So what you're hoping for with a tax lien certificate is that the person is going to come back, redeem the property, and you will be paid out through that interest. Now, in some states, when that doesn't happen, it goes into a tax deed status, or it goes into an auction that would convey a tax deed. So in many cases, if you purchase a tax lien certificate, sometimes you can also end up with a tax deed, but that's very state specific in how that's handled. Some states will allow you to just apply for a tax deed. Some states will put that property back into auction as a tax deed, and whoever purchases that property as a tax deed, what they pay would go to pay off your tax lien certificate. In some states, you can actually participate in that. So in that case, you would be double paying for the property. Each state that has tax lien certificates has a different process, and that's a little bit more detailed than what the time frame that I have here. But just understand that when you get a tax lien certificate, you are not getting any property rights. However, it could later turn into a tax deed, depending on that county and state's process. So I hope that's clear. So now that they understand the difference between those, Renieka, can you give me that question again?
Yes, I sure can. So question is, there's several questions, but it says, if I own a tax certificate and the IRS or state files a lien on that property, what do I do to recover my investment? They ask same scenario in a tax deed situation. And also, what happens when a bankruptcy is filed by the property owner? Can I sell my certificate under this situation? If so, to who? I know that's a lot. I can do them one by one if you want me to.
Okay, yeah, I think I got it. If not, you might have to follow up with that last one. But okay, so if the IRS files a lien against the property, it's just going to be a lien. They're not going to get paid, and you're not going to get paid unless the homeowner redeems the property. That's in the case with a tax lien certificate. Nobody's going to get paid until the homeowner comes back and redeems, right? And the tax lien certificate is still going to supersede the IRS lien. So it's going to get paid first. Now, if that tax lien certificate moves to the point of becoming a tax deed where it's sold or converted, like let's say in the case where that tax lien certificate, you can just apply to the county and have it converted. Now you own the property, right? And then you can in that instance you can now you have a tax deed, so now you can erase the IRS's lien. So what they would have to do is either pay you what you owe or what you were owed for the tax lien certificate when you had the certificate, or you foreclose on their lien because you are the superior lien. Their lien is junior. So it's just like, because a lot of people don't understand that unless, let's say we're talking about a mortgage. everybody understands that if you have like a first mortgage and the second mortgage, that the first mortgage can foreclose on the second mortgage, right? Because it has a superior position. It's the same thing with a tax lien certificate. It can foreclose on any subordinate liens. But I'm with a tax deed. The tax lien certificate can't foreclose on anything. It's just when it becomes a tax deed, it can foreclose. Uh-oh. Hopefully that makes sense.
It does. The second half was about what happens if when bankruptcy is filed by the property owner. Can I sell my certificate under this situation? If so, to who?
For the most part, and this varies by state, and you know, just as a disclaimer, I'm not versed detailed in every state policy just because I haven't worked in every state, but in most states you can sell your tax lien certificate to anybody you want to, and they just step into your position. You know, it doesn't they don't get any benefit. I mean, the benefit only would be if let's say there's a 12-month redemption period and you sell it at where it has 3 months left, then you know it becomes a little bit more valuable because they don't have to wait as long. But basically who you would sell it to is any other tax lien investor that's willing to purchase it, you know. And then the other option is, like I said, in some counties, they have a subsequent auction in which they auction off those tax lien certificates that have not been redeemed. So it really, the tax lien certificates is the most state specific of what happens after that a redemption period expires. Like there's probably about 5 or 6 variables of, you know, what can happen. And, you know, I just kind of gave you the, you know, top 2, the quickest top 2, which is it could be converted to a tax deed, or it could be go back into auction and be sold, you know, as a tax deed. It's a little bit different with tax deeds. So let's say if you have a non-judicial tax deed and somebody files bankruptcy, it will affect not your position, but the time frame in which you can get paid. So then you become just like any other, I'm sorry, with the redeemable tax deed, then you become like any other creditor where the person can pay off that amount that you're owed. So, you know, let's take an example in Georgia. You purchase a redeemable tax deed for $1,000. The person files bankruptcy. What they owe you would be $1,200. And so now instead of having to get that $1,200 back in a year, the time frame is basically based on what the bankruptcy court says. But the bankruptcy court cannot eradicate the redeemable tax deed. You're still going to get paid. It's just, you know, you may get paid in payments. So that's the effect. With an actual tax deed, there is no effect because it's once that tax deed is sold, it is no longer the real property or of the person. So the bankruptcy does not affect it at all. All right. Any more questions, Renieka, before I move along?
I do have a couple more questions. It says, do you have to compete with a lot of companies for tax liens?
Yeah, I mean, that's just a part of it. Competition, you're going to compete with, you know, hedge funds, you know, other investors, you know, so you have to create a strategy in order to be able to compete, but you definitely can still compete. But yes, competition is just, you know, a part of tax lien investing. All right, so why invest in tax liens? Let's be clear. One, and not that this is really important to everybody, but just I want you to understand that when you purchase tax liens, you're actually helping the county to keep moving. It's the revenue from property tax is a huge revenue source for most counties. It's actually the majority for most counties, and so it helps that county to be able to continue to move forward with the services that it provides. The next reason would be pennies on the dollar. Like you're literally able to purchase, like I gave you the example of Tasha. If I had not redeemed my property, she would actually had purchased that property for $2,100. And a lot of people don't believe that that actually happens where nobody redeems, but it does. There are just many properties that maybe the owner is deceased. There's many properties that the mortgage company don't even want to be bothered with. They've already received their investment, goal on the property, so they're not going to redeem it. So it actually does happen where you get the property a lot. So, so you're able to get property for pennies on the dollar. And I just want to say with that, it's kind of hard for people to really visualize what that really means. And just to give you an example, so if you're a regular real estate investor, let's say you're fixing and flipping or buying and holding, it's going to take probably several hundred to, for some people, several thousand properties to really achieve the goal that they're trying to achieve. Whereas with tax lien properties, you could literally have 5 tax lien properties and that will replace your annual salary for work. If you were to buy and hold those, or some people do fix and flip, but I'm speaking particularly with buy and hold. If you have 5 tax lien properties that you own free and clear because you bought them for $2,100, $10,000, even $30,000, but it was worth $200,000, and now you're renting that out, it wouldn't require as many properties. So that's always something that I like to impress upon people with tax lien, is that 5 to 10 properties could equal financial freedom for a lot of people. And then the leverage, especially talking to investing through your IRA, the leverage is just astronomical. Just like I said, you purchase a property for $2,100 and it's already worth $100,000. Like that's just astronomical growth, for your portfolio. So give you an example of some interest rates for tax lien certificates and redeemable tax deeds across the country. In Texas, it's 25%, which is amazing. Like a quarter for every dollar. I mean, where can you generate that type of interest legally and pretty much guaranteed, because that interest rate is backed by state law. So if the person doesn't redeem, then that's an automatic 25. Well, if the person redeems, they have to redeem at that rate, 25%, or otherwise you end up with the property, in Texas. Georgia, 20%, same deal. And then in Georgia, every year it increases. So like, let's say the first year if they redeemed, it's 20%, but let's say it didn't, you went into the second year, which is really, like in Georgia, the second year is the next day after the first year. So year 1 is 365 days, but year 2 is day 366. And on day 366, if the person hasn't redeemed and then they want to redeem, you're going to get 30% now. So it's additional 10%. In Arizona, with tax lien certificates, it's 24%. And then in Illinois, it's 18%. And there's a 2-year redemption period. So that's, in essence, 36%. So just to give you some examples of the type of percentages you can make with, tax lien investing, whether it's redeemable tax deeds or tax lien certificates. And just keeping in mind with tax deeds, there is no redemption period, so there is no interest rate because you get the property.
Chantelle, I did have two questions come up if you're able to.
Yeah, sure.
Okay, so question is, how about New Jersey? What is the interest rate to redeem tax deeds? If you're familiar with Jersey.
I'm not familiar with New Jersey, to be honest with you.
Okay. Next question is, what are the risks for tax lien investing? And then you just reference if the homeowner, if the homeowner pays the interest and penalties early, will that minimize my return on the investment? So they want to know what's the risk on tax lien, and then if the homeowner pays early, will that minimize their risk, minimize their return?
Okay, let me answer that second question first. Yes, it's gonna, well, it really depends on if you want to be a property investor or interest investor. Are you really wanting the property or are you wanting the interest? Because for a lot of investors, especially IRA or 401k investors, they really don't want the property, they want the interest. So that I would say is relative into how you look at it. The good thing is you can end up with either the property or the interest, and so either way you're still getting a return on your investment. With tax lien certificates, though, it depends. There are some states in which if you purchase that tax lien certificate and nobody redeems, you're just kind of stuck with that certificate. And so that's why you have to do your due diligence, not only on the property, but on the state that you're investing in. Because that is a reality for some. So that could happen. And then what are the risks of tax lien investing? So that's one. Is that if you invest in tax lien certificates, you have to know what the subsequent process is if the person doesn't redeem. Are you just going to be left holding that certificate? Because the state is not going to pay you any money back. So, you have to understand that. And then other risks are just not knowing what you're doing. So let's say, for instance, ultimately you have to educate yourself when you're investing in tax liens, because if you don't know what you're doing, you could end up losing your investment. Let's say, for instance, in Georgia, you purchase a redeemable tax deed, and because you don't understand that you have to wait that year, you start to go and do improvements on the property, and now the homeowner comes and redeems, and now you can't recoup any of that money because the law says that you shouldn't have done that in the first place. So most of the risk is education based, just understanding what you're doing and then doing your due diligence, basically. But you can lose your investment ultimately if, that's the biggest risk.
Okay, I have a couple more questions based on stuff that you've talked about or what you're currently referencing now. Question is, what percentage of redeemable tax deeds get redeemed on average? Do you have like a best estimate?
No, because it just depends on your strategy. Like, obviously, if you're going to purchase tax lien certificates or redeemable tax deeds in what we call A neighborhoods or upscale neighborhoods, high value neighborhoods, they're going to get redeemed a lot quicker because people have the means to redeem, right? If you're purchasing in more lower income areas, then you're going to have a higher chance of keeping the property and it not being redeemed because the means to redeem is not there. So it just depends on your strategy and what your target market is. I invested primarily in C and D neighborhoods, so my my redemption rate was less than 1%. But I know investors who they don't want those type of neighborhoods, and so they invest in B neighborhoods, and they get redeemed a lot more. So it just depends on your strategy.
Okay, next question is, so to be clear, tax liens, tax deeds are superior to and supersedes all liens, including mortgage notes?
Yes. It doesn't supersede, like the only liens it doesn't supersede are other county liens. So if there's a demolition lien on the property at the time the tax lien is placed on the property, the demolition lien is going to supersede the tax lien. This is another county lien, and the county is not going to compete with it. The departments within the county are not going to compete. So if it's there first, then it's the first lien. But both of those liens are going to supersede any other liens. Yes.
Okay, a couple more questions and I'll let you proceed with the slides. But is there legal fees or legal proceedings involved or fees involved in order to receive the interest or foreclose on the property?
That's state specific. Some counties you could just go right to the county, and the person pays the money to the county cuts you a check. In other places, like, again, I'm going to reference Georgia, you're going to have to go through a legal process. You're going to have to foreclose on that person's right to redeem. If the person wants to redeem before that time, you and the person have to deal directly with each other. The county steps out of that process, so you have to provide the person with, a quick claim deed, and you have to, facilitate the transaction of receiving your funds. So it really is, and you'll hear this answer a lot. A lot of things with tax liens is very state specific. And so you'll find that a lot of tax lien investors stick to just a couple handful of states because they become very knowledgeable and experts in that state's process and legal ramifications. And so yeah, that answer is really state specific. All right, so just a another quick example of one of our students. She purchased a tax deed property in a tax deed state. She purchased it for $4,500 online, and at that time the property was worth like $271,000. And so and then just keep in mind, over the years, these properties, a lot of them are still growing in value. So that's just really the beauty of tax lien investing. Let's see. How did I become so knowledgeable of tax lien? I kind of already went through my story, so I'm not gonna go through this again. But understand, I went through two market crashes, several real estate investing strategies with real estate before I got to tax liens. And then when I got to tax liens, it was, very much my, my savior. It helped me reverse or come out of a multi-million-dollar bankruptcy and, become financially free. So that's really the power of tax lien investing. Just a little bit, though, not to brag, but I just want to, encourage you a little. It has also helped me to pretty much retire. I'm sitting at home in my pajamas right now, doing what I want to do. And, right now I'm just traveling, and so that's just because I was able to, purchase a couple properties via tax lien investing that, provide me income, every month. And so basically that's just, the goal that I, want for everybody else. Let me go back to this. I don't live the lifestyle of the rich and famous, but I do live the lifestyle of the free. So I just want to make that clear and, hopefully, motivate you with that. I already talked about this property, so I'm not going to go into it. I will leave you with, my final steps, some actionable steps that you can take, if financial freedom is what you want. One, invest in your education. If you're going to do tax lien investing, this is not like fix and flip where you can research on the internet and jump in and go as learn as you go. You don't really want to do that with tax lien, because especially if you're investing your retirement savings. You want to be assured of what you're investing in and how to go about that process. Get you a mentor, somebody who can hold your hand through that process. I didn't do that. I bumped my head, and that's why I'm telling you to go ahead and do that. And start networking with other people, other tax lien investors, that you can also ask questions with. And then lastly, we have a more in-depth webinar that, I know this is your lunch break, but we have a longer webinar. It's a 2-hour webinar. We go a little bit more into depth. It's free, and we want to invite you to register. If you're on your desktop, you can use the QR code to go ahead and register. Renieka will be sending you a link that you can use to register as well. And if you want to just contact us directly, that's our number and our email. Any of our client experience associates would be happy to get you registered. So that's all that I have today. That's all my time. I guess I have a few minutes to answer any questions that you may have, and it's been my pleasure to speak to you about tax lien investing today.
Thank you so much, Chantelle. I do have questions that came in, so let me go through those. I appreciate your time as always. So yes, this webinar is recorded. You'll get a copy of the link. It's also going to be uploaded onto our YouTube channel, typically within 24 to 48 business hours. Just bear with me. Let me go through the questions. So question is, how will you guys help in getting tax liens? So first and foremost, again, Advanta doesn't help our clients with, selecting an investment. You decide what you want to invest in. Chantelle Owens and her team, they teach you how to go out and invest in tax lien, but Chantelle, you can feel free to elaborate more on that if you need to.
Okay, yeah. So once you attend our introductory boot camp, we offer another class, and then we basically will hold your hand, walk you through the process, take you to auction. So yeah, if that's something you're interested, just make sure you sign up for this particular free boot camp, and we discuss that there.
Okay, question is, I've never been to a tax sale, but I plan to attend your webinar. In case a tax sale has bidding war, what's your advice for an amateur like me to buy a tax certificate? Some people mention up to 90% or so.
So we have formulas that we use, and so I would advise you to do your education on the value of that property, which could vary depending on your strategy. The value for a fix and flip investor may be different than a buy and hold investor. So you have to, know your exit strategy, and then based on your exit strategy, you're going to determine, how to figure out value, and then from there, you can figure out, what we call is your maximum bid, and you stick to your maximum bid, and don't allow your emotions to, overtake you at auction, because we see that all the time.
Okay, next question is, what is the average tax lien cost for properties in C and D neighborhoods in Georgia?
Ooh, that is such a loaded question. It's really, it's an auction. So, one day a property, let's say, you got two properties side by side, neighbors, at one auction, let's say in August, one of those properties could sell, let's say for 100,000, and then 160, or because it's an auction, people do emotionally bid. There are people that come there that have no clue what they're doing. Sometimes maybe even the homeowners may be there. So I can't really answer that question. Tax lien investing is basically you got to go and see what happens that day. And you have to know your maximum bid for the property.
Okay. Next question is, can I invest my money? I'm sorry, it just jumped on me. How can I invest my money without the boot camp?
Definitely. I mean, oh, do you mean would I take your money and go buy tax liens for you? No, I'm retired. I'm traveling, so I don't do that anymore. But pretty much, you know, you don't have to take our boot camp. You can invest in tax liens on your own. But my suggestion is, even if you don't take our boot camp, you definitely need to either invest in that learning about tax liens or find somebody who, you know, is very knowledgeable about tax liens, and that, you know, they'll go and do that for you.
Okay. Next question is, what is the factors that these states, counties use to determine how much interest will be paid?
Most states have a committee for that, like a legislative committee that determines that, and it's not changed. That amount literally doesn't change. Like, I think Georgia has been that way for, you know, over 50 years, so it doesn't change that often. But usually it's a committee that determines that. A legislative committee is legislative.
Okay. Next question is, what is the best way to learn about our specific state rules when it comes to tax liens?
So I would say take a course. You know, our course teaches you how to go. Like you're going to learn the basic of each instrument, and then you'll learn how to go into each state and learn what the process is. So, you know, I really can't answer that without being biased.
Okay. Next question is, are there services that sell tax liens and deeds?
There used to be. I don't know. Honestly, I don't keep up with that, because what those services, in order for them to make money, you are increasing your chance, your risk. Because, okay, just to give you an example, do I have time? Okay, yeah, just really quickly.
Yes, you do.
So let's say if you purchase a tax lien, if they purchase a tax lien for $1,000, let's say this is in Georgia, just so it's a clear example, they're gonna, if the tax lien is redeemed, they would get $1,200, right? So if they sell that, tax lien to you, in order for them to make money, they would have to sell it to you for, let's say, $1,300, right? So now that's putting you at risk, because if the person redeems, you're going to get $1,200. You understand what I'm saying? So it's a very tricky thing. Like, you would have to evaluate each scenario independently, and you would mostly be hoping to get the property in order to make money. But there's no guarantee, because you can't control whether the person is going to redeem or not. So it gets kind of tricky with that. If you're going to do something like that, I would say stick to tax deeds, where you know you're going to get the property. And so now if they got the tax deed for you know, let's say 10,000, they sell it to you for 20, you know, then, you know, you're still getting a good deal if the property is worth, you know, $100,000 or whatever.
Okay, quick follow-up question. It says the interest is the interest paid prorated? Like if they redeem in 2 months versus 11 months, will you receive a smaller check?
So in tax lien certificates, yes, that's how that works. With redeemable tax deeds, no, it's more of a simple, it's an interest penalty. So you get the whole amount. So let's say in Georgia it's 20%, you would get the whole 20%. But let's say if it's in Illinois, where it's a tax lien certificate, is 18% for that year, it is going to be prorated, you know, like, if they redeem in the 9th month, then you would get 9 months of interest. You wouldn't get the full 12 months.
Okay. Last question is, do you help with tax lien guidance and how much is charged for it? So yes, Chantelle did provide her contact information. So if you want to attend her boot camp or learn more, definitely feel free to reach out to her.
Yep, just sign up for this boot camp. I don't personally mentor people personally. It's only in a classroom setting. So just your best bet would be to just register for this.
I'm sorry, just bear with me. Question is, can I buy my own property tax lien?
If it went to auction, yeah, but I mean, the best bet would just to be pay your taxes, and then it wouldn't go to auction, and you could avoid all those fees. And avoid the chance of losing the property. Because if you buy your own tax lien certificate or tax redeemable tax deed, you're competing with other people for your property. And it's, just because you're the homeowner, you would just be better going to the county paying the taxes.
Okay.
If that makes.
All right. Thank you so much, Chantelle. I really appreciate, you taking the time to knowledge share and answer questions. Again, if you have, if you want to know more about self-directed IRAs, definitely feel free to reach out to me. If you want to learn more or attend the Tax Lien Bootcamp, feel free to reach out to Chantelle and her team. And with that, I'll go ahead and disconnect. Thank you, everyone.
Thank you. See y'all soon.